Hello, this is Doug from StealthTrader.com. We're going to review the video from a live trade that we did today on the S&P 500 future contract. That's the ESM5 contract. It is the future contract for the S&P 500. You can see that the systems intelligence is showing us that we have a trade that can trigger to the long side. Our perception gauge is below the blue line, giving us an oversold and a blue dot on our peak indicator light. Our commitment gauge is below -80, giving us a blue dot on our peak indicator gauge. Our equilibrium is below the -2, giving us a blue dot on our peak indicator gauge. And our short-term sentiment is at its extreme, giving us a blue dot. So we have 4 blue dots all the way across the board. Trade price right now is trading at 2057, and we placed the buy order in at 2057.50. And we are filled on this order. Our longer term and mid-term sentiment is all showing that the sentiment is to the long side, so this trade is in the direction of the overall sentiment. Our equilibrium, multi-time frame equilibrium gauges are showing that on several of the time frames that we're at least one level below or more, and we want to see that so that we come back towards equilibrium. We now have our perception gauge no longer in the oversold. We are testing this 57.50 price again, so we can actually take another contract on this if we want, because the system is not telling us that we're wrong. Our short-term sentiment gauge is showing a little bit of selling pressure, but overall the conditions are good for us on this trade. So we entered a second contract at 57.50, and we're looking for this to now come up towards its equilibrium price or towards the zero line on commitment or the center line on perception to look to get out of this trade and take a profit. So we're currently long 2 contracts at 57.50 and waiting for it to come back in our favor. We're still in a overcommitted situation on the commitment gauge. We are in below -2 on the equilibrium. So what we don't want to see is this get below the -4. As long as it stays above the -4, we should have a profitable trade on our hands. You can see that we've got some bright blue coming up. That is showing that we've got buying coming in, and we do want to see that. So we're going to take one contract down at 2058. That means that we're selling back one contract at 2058 on a limit. The limit means that it has to get filled at 2058. That will give us $25 on the first contract. We're going to allow that order to continue to work. We just got taken out at the 2058, and we're rotating back up in towards equilibrium. Equilibrium is sitting at about 58.50 right now, so we want to be aware of where that equilibrium is and where fair value. You can see that the commitment gauge is coming up towards its zero line. The perception gauge is coming up towards its center line. So we're going to watch this trade and see if it will continue to go in our favor. If it doesn't, we're going to close out the second contract for profit as well. But we are going to give it a little bit of time to allow it to see if it moves further in our favor. But we have to be aware of the fact that we are coming back into equilibrium. We're coming back into the center line on the commitment, and we have to see that we are coming to the center line on the perception. And if it doesn't move in our favor, then we have to look at closing the second contract out and taking it at a profit. We don't want to see this go against us on the second contract. We want to see us take a profit or keep the profit that we took on the first contract. So just giving it a little bit of time to see if it will move up, and a lot of times I like to see it move to the on a long -2 to the +2, because you can get continuation. That's why I'm allowing the second contract to continue to stay working, and hopefully we'll get a move up. But if it doesn't start moving in a couple minutes, then I'm just going to take the profit and sell the second contract. Our midterm and long-term sentiment, we're getting a little bit of selling on the 5-minute. We really want to see this above the median line right here. But we do have on the longer term sentiment, the sentiment is still to the upside. But we do see some selling pressure coming in here. The bright red is selling coming in, and we really don't want to see that. We want to see this stay blue and get bright blue. So we're just watching this closely. Price is sitting right in the range of equilibrium, and I really want it to stay above this equilibrium price. Right now the bid is at 20.58, and if it doesn't stay above that, we're going to place another sell order at 20.58. It's really struggling to stay above this center line on the equilibrium gauge, and we are now at the 0 line on the commitment. So what I'm going to do is I'm going to place a sell order on limit. That means we have to get filled at 20.58, and we're going to take this trade down for another 2 ticks. Each tick on the S&P 500 future contract is worth $12.50. So we'll take it down. We took the first one down for $25. We'll take this one down for $25 and give us a profit of $50 less commission. You can see that this is becoming increasingly difficult to hold above this center line on the equilibrium gauge. So the system is telling us that there is some selling pressure coming in here. You can see this is on the 5-minute getting more red and now peaking below its center line. And the high that we've been able to get on this trade so far has only been 20.58.50. So we're just got filled on the second contract to close this trade down for a $50 profit. Join us next time at stealthtrader.com in our live chat room, and come check out our 14-day free trial. Thank you.